Hello and welcome to a new video where we're talking about micro contracts in the futures market. Now, I know recently when the CME released a series of very popular micro contracts, this did not get the hype and it did not get the attention that it really deserves for what an incredible thing that this release was and what this means to retail traders like you and I. The implications of this and what this is allowing us to do is absolutely phenomenal. And in this video, I just kind of want to break down some of the benefits about trading micros, what we use this for, what we don't use micros for, where they fall short, where they excel. And I just want to give you some thoughts here and some of my perspective on this incredible thing that we have available to us, which is micro contracts. So, the first thing to understand about micro contracts, if you maybe aren't really familiar with what these are, when the CME released out a series of these micro contracts, these are the same high quality products that are available in the futures market, but for a tenth of the size. And what this means, among a lot of other things, is that starting a active trading business with a very low amount of capital is now a true reality because we can access these superior high quality products that are only available in futures, but we can access them with very little downsides as opposed to what the full size contract is holding. Okay, so that's the main thing to keep in mind here is that these micro contracts, and I've talked about micro contracts on the channel before, but something like the S&P 500 now has a micro contract, which is the MES. This has been out for a little while now. They're not brand new, but they really are new. And not enough people have checked these out. Not enough people have really transitioned into these. So let me give you some of the added benefits about doing this, but also maybe even beyond the added benefit, just how you should be handling and looking into this if you're currently trading micros or if you're looking to trade, okay? If you have any interest in the futures market at all, there is no reason to be trading the full size contract if you are not consistent. While you are learning and while you are understanding and building up consistency, you can use the micro. The only reason why you should be using the full size if you're just focused on the P&L. And if you're just focused on the P&L, you are stretching out the learning curve because you're not doing the things that you need to do to focus in on the craft. Now, one thing I would really strongly encourage in the way that you should be handling the micro contract, this is important to understand, is you want to do all of your charting and you want to do all of your analysis on the full size contract. So if we flip over to a screen so we can see what I mean by this, what we have going on here, this is my charting layout. And it might look a little complicated, but what we're looking at now is just the S&P 500. And this entire layout has been very intelligently designed. There's no wasted space. And it might seem a little overwhelming, but we're just looking at things in a very, very nice way. I've made so many iterations of this in the past to come up with where it is now. From looking at what we need to do with our charting to our order flow and our market depth analysis that we put on. It's all here, and this is all just the S&P 500. Now, what I do is everybody that works with us, if you're a client, you have access to exactly how I have my chart set up, exactly how I have my tools configured. And then what I have this set up with is the S&P 500 chart, but then there's an option where we can pull up the micro contract. Okay, the market's closed right now, so this is looking a little screwy here. But what this will do is this is the micro contract, but it's just a price ladder. So all of our charting, all of our analysis happens on the full size contract. Even if we're building this up to the daily time frame, all of this is going to be full size E-mini contract. And then we have a price ladder, just this little depth of market here for the micro to actually place our trades. So what this looks like is we do all of our prep, we do all of our analysis. We even analyze the market depth on the full size contract, but instead of pushing the button on the full size, you have the option to just push the button on the micro. And this is really how you want to handle it, because if you're looking at the amount of volume going off and if you're looking at certain specifics, for me, this would be specifics about the volume profile. So certain high and low volume areas are going to be different on the micro. Even something like where the point of control was can be different, where the value area high or low, where exactly it is. That type of information has the ability to be different. A lot of times it'll be very close, but it's still different. And so everything that I do and everything you're going to want to do is charting and analysis on the full size, pulling up and having access to some kind of a depth of market just so that you can place the trades and interact, but then you can also put that down and just focus in on putting the story together and coming up with trade ideas based on the full size contract. And this will just be for every product you trade. You can set it up like this where whatever you need to be trading with, but then also some kind of an avenue to where you can place trades on the micro. It's a really nice way to handle this. You don't want to do all your charting and all your analysis on the micro contract, okay? Now, let me explain to you one of the downsides about trading the micros. All of the upsides are the same exact as trading the full size contract. And I've done videos on this channel before where I talk about what makes futures so superior and why specifically I like the ES. And I've done videos that you can check out on all of those, and all of those same exact things apply to the micro contracts here. But one of the downsides of trading micros that you need to understand is the expense that goes along with trading these. When it comes down to the cost of fees and commissions, it's going to be much higher than on the full size, all right? When you break it down to what the tick value is of these products, so the S&P 500, for instance, the full size, E-mini, when it moves a tick, that's $12.50. When the micro moves a tick, it's $1.25. So if you understand what the tick value is, but then you understand how the fees and commissions work, and you compare them that way, like accurately, you'll understand that it's about 3 times more expensive to trade the micro than it is to trade the full size. Now, this is changing, and because of the large demand for the micro contracts, I think that this will keep becoming more and more competitive, and that gap will even get closer and tighter. But right now, on average, it's probably about 3 times more expensive to trade the micro with fees and commissions than it is to trade the full size. Now, I'll say this just as a couple things about fees and commissions. One, it is worth every penny, even paying 3 times more. The ability that you have with a small amount of capital, and I've done this on this channel a couple of times where I've taken an account under $2,000 and I've grown it up. I've taken an account with $1,250 and I've grown it up. To be able to start with that low of money and to access a superior product like the futures market, you have nothing to complain about the extra fees and commissions or the higher fees and commissions, because it really is worth every penny. You are getting incredible value for what you're spending there. The second thing to understand, just kind of real talk, is you are not failing. I shouldn't say failing. You are not earning money consistently because of the fees and commissions. I promise you. If you're not earning consistently, there's something wrong with what you're doing. And a lot of traders will, let trades run against them for points and points and points, and they'll get crushed out on certain trades, but then freak out about the fees and commissions. It's not the battle to be fighting, and it's not what's really hurting you. I'm all about getting the best fees and commissions you can, as long as you're not sacrificing the quality of what you're getting. But if you honestly are looking at your trading and the reason you're not making money is because of fees and commissions, then you have a very faulty model, and you're trying to do some kind of very aggressive scalping that is just not going to work. So you would need to rethink that whole thing. But for everybody else out there, the fees and commissions are not why you are struggling, or it's not the thing that's holding you back from making money. Okay. The other thing about this higher fees and commissions to understand is it's not a problem at low scale. It only becomes an issue when you want to start scaling this thing up. And if you were trying to trade 70, 80 micro contracts at a time, even way before that, but still, you would be running into some major issues with the fees and commissions. But it's very important to understand that the purpose of micro contracts and why you're trading this is not to try and scale and make millions of dollars. To trade the micro contract is all about learning this product. It's about learning consistency, and it's about learning how to trade. You're sharpening your craft, you're learning your skill. And then as soon as you learn that, and as soon as you start scaling, you switch to the full size contracts. That's the dynamic. So before you ever get up to 30 micro contracts, you would just trade 3 full size. And so the fees and commissions, they're not that expensive. Comparatively they are, but they're not expensive in real dollar amounts when you're keeping it at low scale. And then as it scales up, you're not using micros anyway. At least you shouldn't be. In that case, you should be switching to the full size where the fees and commissions are what they are. And there's really nothing else to do about that. Okay? So these are a couple really important things to keep in mind. There's other things I could talk about. I think the benefits of trading futures, I've already talked about on this channel. Specifically, I wanted to speak about how you chart and how you trade, the differences there. So what we said about charting on the full size, trading on the micro, very important. Understanding that the fees are higher, but then understanding that you're not supposed to trade micros to scale and retire and make your fortune. You are trading the micro to learn what you're doing, and then you want to start transitioning into that full size contract, or into multiple full size contracts, which is what you'll use to start scaling. And you won't be using that on the micro. Okay, so this has been a quick video, but I just wanted to bang out a couple key points that I know are confusing for traders, and I hope that clears it up. I hope that speaks into it a little bit. If you are still here watching to the end of this video, you're probably a fan. I appreciate you hanging out. Let's all hit the like button on the way out. If you're going to be on the screens between now and the next time I see you, I wish you very happy trading. Be careful out there, watch your risk, and I'll see you guys in the next video.